So yeah, so I'm going to talk today a little bit about we're going to touch on the topic of risk reward ratio. If you have a trading account, how much of your we're going to talk about margin, okay? How much of your overall trading capital should you commit into trades, okay? What percentage of your trading account should you risk? And by the way, we call in trading your capital, your whole capital. So for example, say you start a live account with £1,000. Yeah, we say your risk is £1,000. Okay, so we call all the money you trade with risk. Okay, and when you take a trade, you know that. So for example, if you take a trade that costs you £50 and you have £1,000 account, so you would say, yeah, I've put £50 into a trade. Okay, that £50 is the margin. Okay, that's how much you've committed into a trade. But you could lose more than £50. Okay, so for example, should your trade be making a loss up to the volume of £50 and you didn't set a stop loss, it just keeps going on and it keeps eating into your capital. Okay, so that is why all the money that you have in your trading account, we call it risk. So when you hear the word risk, it's not like something to scare you. It's just a term. It's just a professional term used in the space that you've entered into. So if you're going to trade, money is called risk. So for example, if you were to be hired by an hedge fund to trade as a trader on a trading floor, they would allocate a certain amount of risk to you. Okay, and the better you become a trader, the better you become as a trader, the more risk your company will be able to apportion to you to take on behalf of the hedge fund, the company. Okay, so in trading, money is called risk. Okay, so you increase your money, you increase your risk. Yeah, so we're going to talk about what's the percentage. And I'm just going to be realistic with you. I'm not going to go by the books because sometimes I find it to be nonsense. It doesn't just make any sense. But yeah, I'll tell you what I believe, what I have practiced, and I believe has worked. Yeah, and then I would show you some of the tools that are available. I don't want to go too much into that now because I don't want you to start relying on tools at this point. I want you to get the basics right. Okay? I want you to get the basics right. It's like if I want to teach you to drive. Okay? If I'm teaching you to drive, if you're doing a driving lesson with me, and I'm still at the point of teaching you what the gears are, how to match the gears to your speed, how to check your mirrors. I can't just start teaching you how to drift. Okay? You just say, well, since it's part of the course at some point, I'm just going to tell you there's something called drifting. There's no need. Because tendency is you may want to just try it out. The human mind is funny. You may want to try it out and then you're going to just kill yourself. Okay? So there's no need. We will get there. Or I can just start giving you some tips of drifting when you're still learning to understand your gears. It doesn't make any sense. Do you understand? So that is why I would say things like, oh, there's certain things that I would show you, but it's not time to show you yet. So the same way, I don't want to start showing you technical tools yet. I need you to understand the basics. And the basics here, the most important basics, now that you've started trading, is support and resistance. It is extremely, then these tools you will combine with the basics that you know, and it amplifies your knowledge and it makes you more effective in the market. But you must be an authority in using support and resistance. So there are still some more theoretical things that I would like to share with you, but at the moment, what I have shared with you is good enough for us to get you to a place where you'll be confident with taking trades. Okay, so let's still stick to that today. So I'm gonna share my screen. I'm gonna share my screen again, and we're just gonna go through a couple of stuff. So my intention in the time being is to get you to get more confident in taking trades. You can look into any market, analyze it, and take trades. That is my desire right now. That you can look into any market, analyze it, and take trades. Okay, so I'm going to share my screen now. I'm going to share my screen now, and then we look at certain things. So before I start talking, I know someone mentioned, Angela mentioned that she lost money in this drop that happened yesterday, this huge crude oil drop. This is daily chart, by the way. Can everyone see my screen? Can everyone see my screen? Please confirm that you can see my screen. Can everyone see my screen? Okay, can see. Okay, great. So this drop, this was a one-day drop that happened yesterday. You can see how massive the drop is. Okay, and remember I was telling you that price fall faster than it rises in trading. Like good news, bad news are just, they drive the market quicker than good news. Okay, except of course if people are deliberately waiting for good news. Remember I told you the conditions or circumstances under which people will just be waiting for anything good to just, when people psychologically just want to get to a particular price point in the market. So for example, say 62 is a psychological price point, okay, or say 60, yeah, say 60 is a psychological price point, and price was already as high as 58, okay. If people just want to see price touch the 60 and then they don't care what happens after then, they will just hang on to any stupid news that sounds good. Even if it doesn't sound all good, it will sound good in their ears just to push price to that psychological level. And then they don't even mind if it crashes from there. Okay. And most of the time, the price jump is not, cannot be justified by anything substantial. It's just people just want to see price get there. So welcome to the market. One of the things that used to, I don't want to say hurt me, but used to give me concern when I started trading was when I learned to trade, okay, I learned what should be, okay, I learned what should be, okay, under normal circumstance, this is what should be. And what I quickly started saying was it is not all the time that what should be actually comes to be, okay. So that gave me concern. I thought, oh, this market is just a fraud. Well, I learned if this happens, then this is supposed to follow. But that is not the case. What's going on? Why? Why is that? Some people are manipulating the market. It is not true. Okay. There is the theory part of things. Okay, where by the books, this is how things should be. But you must understand that you're interacting with a market that the activities in that market are determined by human beings. Okay. Even though there are so many robots trading, there's so many computers, automated systems set up to trade, to take trades, but those systems are still extensions of people. People tell the systems what to do, okay? The systems can only execute trades faster than people and duplicate trades, you know? So a trade that I would take, a computer can search all over the market and take 100 of similar trades at the same time, provided I have enough capital for the software to execute the trades. Does that make sense? Of course, at some point during this course, probably towards the end, I would introduce you to automated trading. But do you guys understand what I mean by that? Automated trading basically is everything I'm teaching you to do now. You can write a computer software that will take certain criteria into account and it will execute trades on your behalf. Okay? And of course, computers are a lot more efficient than human beings when it comes to speed and duplication. Okay, they could do certain things faster and in higher volume than what a human being can physically do. Okay, but the computers don't just decide what to do. Okay, human beings tell them what to do. So in other words, they are still fed data by human beings, and then they can then aggregate those data and run with it. So I figured in the market, and I learned something very, very crucial from one of the people that I follow on Twitter. By the way, you need to have a Twitter account. I believe all of you have a Twitter account, and you need to follow certain people who knows what they're doing in the market. Okay, there are certain people that are worth following, not to just swallow everything they have to say. It is just to have your ears out there to know what's going on out there. Okay. So this person said, he said, trade what you see, not what you know. Okay, trade what you see, not what you know. And what does that look like? Okay, now look at this chart. Yeah, I could look at this chart from like this is November. Okay, I can look at this chart and think, look, when price touches the top here, yeah, when price touches the top here, price stayed, in this region for a little long before it eventually dropped down. Okay, before it eventually dropped down. And I can see as well that every time price moves from the top of the channel to the bottom of the channel, it always does it over at least a couple of days. Okay, or say from this half down. Okay, price never just goes from the top right to the bottom. Okay, or yeah. So in this case, it took one day to cover half of the journey. Okay, and then the second day to cover the half of the journey as well, and then price returned back to the top in the same fashion. And look at here now. So if you form any opinion in your head based on the chart you're looking at, you don't trade what you know, you trade what you see. So in other words, I'm saying that price comes down here, yet price is trapped between this range now. Okay, and I could say, oh, look. The last time this happened, price crossed this line. Price didn't continue, still came back into the range. Did it the second time here, came back into the range. I haven't done it in a long time. Now it's done it a little bit now, okay? But based on this, you can see, I told you the red candles, price close at the bottom of the body, okay? Open at the top of the body, close at the bottom of the body. Every single time price has crossed this my line, again, lines are not support and resistance. They just help us to see price region. Okay. So, but every time price crosses this line, yeah, price still closes in the channel. Okay. Price, the body of the price never closes outside, closes in. Every time that happens in trading, we call this false break. In other words, this support didn't break. Okay. This is still a test. Okay. It was a test that was pushed, but the support held, so it sends price back into the range or into the channel. The same thing over here. But if you look at this and the same thing over here, price crossed a little bit, okay? But price managed every single time price came down to the support, price managed to pull back. You can see every single candle, you can see they have a candle wick at the bottom. Price managed to pull back. But in this instant now, this happened on Friday, price actually closed outside the range. Can you guys see that? The body of the candle, price actually closed outside there. That means price didn't close inside the channel. Price closed outside the channel. Now, I'm not going to trade what I know. What I know is that it's not a big deal. Like, it's not like price closed down here, so we can still say, look, it still looks like this pattern is in shape. And as a matter of fact, I could do something like this. I could say, look, hey, I could adjust this line and say, yeah, if I put this line here, it still looks like a valid line, isn't it? Because look, 1, here, 2, and 3. So I can say, oh, price coming down here actually then makes this channel properly form. Okay, that's one thing. But this is based on knowledge. Yeah. But trade what you see simply means the line that I put there before, that I've been trading for a very long time, all of a sudden price has closed above it. It simply means I'm going to be very careful on Sunday. Okay? And I'm going to follow what price does, not what I expect price to do. Normally, I would expect price to just take off from here and start going up. Okay? But I'm not just going to expect that blindly. I'm going to critically pay attention, especially if I'm trading crude oil. If I wasn't trading a particular market, I don't care about what happens immediately. I'm just going to come back again to say, oh yeah, so what has happened? Oh yeah, this is what's happened. Okay, fine. But if I'm trading a particular market, if I'm looking to trade it, I'm going to watch it closely, because remember, trading is all about monitoring price points. So there's certain time that you want to take a trade if price gets to a certain point. So you want to monitor price and make sure it gets there so that you can take your trade. Okay. And if you're already in a trade, you're monitoring your trade because you don't want price to move against you. You want it to move in your direction. So right here at this support right here on Monday or from Sunday night, I will start paying attention. Okay. And I will set a psychological price point myself. That look, if price should pull, in my own experience, what I would then say to myself is, price has been forming higher lows. Yeah, this is a low, higher low, higher low, higher low, higher low, higher low. Okay, and on Friday higher low. But you can see even this Friday's higher low was so close to this. So what I'm gonna say is, come the opening of the market on Sunday, okay, stroke Monday morning, if I was in the trade, yeah, let's say I was in the trade up to this point and I have a big minus and I haven't closed my trade yet. If this low takes out this previous low, means if the next candle shows up and comes low and takes out this previous low, I'm gonna lock in, I'm gonna take the loss and I'm gonna close my trade, because price could then eventually then go down. Price could be going down to 54 now, because people will just begin to have psychological price point in their head, like, look, if price has reached this level, it might as well get to 54 before we decide to send it back up again. Okay? And another rule of thumb is, every time price takes out a previous low, it's going to start eyeing the next previous low. So I'm going to use lines now to describe what I mean. So for example, the previous low, okay, was here. I'm talking about the bottom of this green candle now. Okay, the previous low was here. Look how close price is to it. So when price opens on Sunday, okay, price may just start going up as a reversal, yeah, that this channel, the downward trend is now complete. So the next is next for the bulls to take you back to the top of the channel, okay? Or if the bulls don't kick in very, very strong, the bears will still attempt to sell it, yeah, to retest the low of this previous low. If the low holds, then price will go up. But even on the way back up, you see this line that was support will first of all become resistance again. Remember, every support that is broken to the downside, when price is coming back up, it will become a resistance. Every resistance broken to the upside, when price is coming back down, it will become a support. Okay, because they are price points. They are not just lines. They are price points where in previous past, price behaved a certain way. When price is coming back to that level, either from the upside or from the downside, price will tend to behave, will try to respect, let me say it that way, respect that price point before deciding the next thing to do, okay? And most often than not, those price points become the opposite of what they were previously, okay? So a support will become a resistance if price breaks it to the downside and price is attempting to reach that level again, climbing from the bottom, it will become a resistance. Can you repeat the support and resistance concept and how it's changed? Okay, so I'll give you a very, very valid example now, Roy. I'm going to show you. So for example, look at this. Okay, you look at this area. Okay, look at this area right here. You can see price came down, boom, pulled back up, came back down again, boom, pulled back up, came back down again. Again, maybe not didn't really touch it, but that's why you see that I always put two lines. Okay, so this area right here, for a period of time between like August and towards like middle of September, this area was a support, okay? And the resistance was kind of like up here. Okay, this area was support, so price was bouncing here in between this area. And eventually what happened was price broke it, okay? Price broke it to the downside. I know what is support and resistance, yeah, support line, yeah, understood. Yeah. So eventually when price broke it to the downside and prices are now attempting to go back up, you can see that same region now has now become resistance. So every time price got there, price is just pulling back. Yeah, price is just pulling back. So we can say this line, okay, or these two lines, whatever you want to call it, or this area right here, yeah, that was previously support. As soon as price broke it to the downside and price is trying to go back up again, as soon as price got there, it has now become a resistance. Price is now finding it difficult to go above it. I wouldn't say always, but most often than not, it happens. So it is something you should watch out for. Okay? So every time a resistance that has been holding or a support that has been holding, every time they break, when price is coming back down or back up to it, price will always, most often than not, respect it. Okay? So it will become whatever it was before, it will become that in the opposite direction. Okay? And I can show you that again and again and again. So yeah. So so what I was saying here is that again, I'm just now your knowledge of technicals get more rich and richer and richer and richer. Yeah, every time you're seeing an ascending channel or a descending channel, higher high, higher high, higher high, higher low, higher low, higher low, higher low, higher low. As soon as the highest, the new price movement that is supposed to form the new higher low, yeah, comes so low and it comes beyond the level where it's supposed to stop to make a higher low. So for example, the lowest it should get was where it got to on Friday, okay, and began to pull back a little bit before the market closed. Now, if the market should open on Sunday, ideally, price should start going up to fill in this space, okay? Price should start going up to fill in this space. But should price continue to pull back down, traders will immediately start looking at this previous low to see if price is going to take it out, okay? And as soon as price gets to the same level as this previous low, people's eye are actually on it. And I can bet you most people that are selling will take their profit. If they haven't taken their profit here, okay, some people will have taken their profit here. This little pullback that you see here is taking off profit. I can bet you that. Price got here. People have seen, they've revised their line and look, boom, boom, boom. Wow, they locked in their profit here. Some people will still be in the trade, okay? And some more sellers may jump in it on Sunday to say, look, let's see if we can pull this thing down a little bit more. Okay, so as soon as market opens on Sunday, some sellers may jump in. If buyers jump in aggressively, you just see price will just start going on and the sellers will just, there's no point. The bulls have taken control of the market, so we'll wait until price gets up here again. Or hey, a bear can become a bull. Someone who was a seller here, taking their profit, can decide to ride the wave back up again. Okay, and but let's focus on here now because this is where price is at the moment. Okay, so forget about what's happening here now. It hasn't happened yet. This is where price is right now. Okay, so if price opens on Sunday, there's two things that can happen. It can either go up or down. If it goes up, fine, normal. That's what's expected. If it doesn't go up and price continues to push lower than the close of Friday, okay, the next you're going to be looking out for is the previous low, which is this one. If price gets to that level and pushes below it, if I was buying, say I bought here, or say I bought here, obviously, price could have been bouncing between this top half. Say I bought here, okay, and price takes out this region completely and starts going down. Obviously, I'm going to be expecting the bottom channel, the bottom of the main channel to catch it. That's if I have enough money to stay in there. Because ideally, as soon as you take your buy trade here, you should have set your stop loss. The same thing I'm doing here, you should have done it here. So how do I set stop loss? You don't just set stop. There's two ways. You can set stop loss based on money. You can decide that, look, in this trade, I don't want to lose more than 20 pounds. And then you just set your stop loss exactly at 20 pounds. But is that the best way to set stop loss? I would say no. Because, for instance, what if price goes up to like 25 pounds minus and then starts moving your direction and actually goes all the way to hit your profit target? Because you set your stop loss at 20 pounds, okay, the price will hit your 20 pound stop loss and then you take your 20 pounds loss and price will eventually go to where you anticipate it to go. Okay, let me make that example substantial. Think about the top of this line. Okay, you see these two lines. Okay, there's two lines up here, there's two lines at the bottom here. Think about when price was traveling down from the top of this channel and price, say I was trading this top channel. Okay, the main channel is this top and this bottom. Okay, but there is a little channel that formed at the top here. Okay, say I was trading that channel. Okay, And say I was trading, price was at the top, so I sold, okay? And price was coming down, okay? And price got to this region, okay? And I took my profit and I reversed my trade. So I took another trade at this line, okay? Okay, I took another trade at this line. And say I set my stop loss, okay, say I took my trade at the bottom of this red candle, okay? Let me make it a little bigger, okay? Yeah, say I took my trade here, okay? Price fell from here to here, okay? So I took my trade from here, expecting price to go up, yeah? Maybe go up to around the top of the chart, the top of this particular candle, yeah? So I put a straight line there thinking, if price, I'm gonna take my trade here and I'm gonna take my profit when price hits this level, okay? And let's say I step my stop loss and say, if price goes down and touches this line, then I don't want to take any loss lower than that. So I want IG to close my trade. Okay, so let's put this line like around here. Boom. Okay, so I took the trade at the bottom of this red candle and I set my stop loss on this black line here, saying, look, if price doesn't go up straight away, if price continues to go back down, if it reaches this line, I don't want to be in the trade anymore. Okay, I want to cut it because I'm thinking price could bounce back or price could break it. Okay, so I want to take my, if I'm not physically watching when price does that, IG close my trade for me. Okay, and say the loss between this level and this level, say it's 20 pounds. Okay, so you say, you know what, I don't want to lose more than 20 pounds. Now look at what happened. Price was going up, yeah? So you're happy now, your trade is in profit. And all of a sudden price reached halfway, okay? Remember your target is this line. Okay, so price started traveling up, reached here now, okay? And even in the next candle, it's reached as high as here. Look, as high as here. And then price came back down. Because remember, in this candle, price came this high, price came this low, okay? So price came all the way down, crossed your 20-pound stop loss line just by a whisker, and then eventually went up, okay? And hit the target there. What this simply means is this tiny bit of poking the line would have ended your trade, earned you a loss, and then price eventually will go and hit your target. Okay, so that is why it is not wise to set stop loss by amount. I'm not saying it's wrong. You can do it if it works for you, if that's what you decide to do. I'm just saying a more effective way to set the stop loss is to look at the previous low, because most often than not, that's the level price will test if price should go below where it should go. Okay, so ideally in this trend, okay, in this current trend now, this is the previous low, this is the next low, yeah, and then obviously the trend moved a little bit higher. Okay, so I could duplicate this line now. I could duplicate this line, okay, and put it here, okay. The price restriction moved a little bit higher because after these two times, price didn't really come this low anymore until in the future here, okay. Price started stopping around there, okay, boom. Test this line multiple times. Here, sent it up. Here, sent it up. Here, poked it a little bit, sent it up, and then eventually, in this time, price crossed it emphatically, okay, but still respected these previous two lows, okay. So what I'm saying is, according to this trend that was happening, so let's forget these two now, okay, let's focus on the recent times because this is over a month, isn't it? Tuesday the 15th of October all the way to Wednesday the 20th, so that's about a month, okay. Yeah, that's right. So price has been bouncing on this line, okay, forming higher lows. Okay, this is a low, higher low, higher low, higher low, higher low. So you would have expected this, if you were following this pattern, to stop around here. Yeah, to stop around this level. To stop around this level and go back up. So now it's crossed that level now. Okay, it's crossed that level now. So imagine if I took a trade here. As soon as price hit this line, okay, this particular line has been holding this top one, boom, 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 boom. Imagine I took a trade here and price crossed that line. I'm not going to panic yet. Of course, every time you take a trade, you want price to start moving in your direction straight away. That's what everybody wants. You want to see your trade cross to blue. Okay? That's your desire. But most of the time, it may not happen that way. Okay, price may push a little bit lower. And if it pushes a little bit lower, my eye is already watching this line to say, look, okay, this is the line that should catch price for me and send it back my way. Okay? And say price gets to this line and price crosses that line. Okay? What I'm thinking is, where is the next price? Where is the next level that would stop price? If the next level that would stop price is far away, then I'll close the trade and accept the loss. Okay? But the next level that has the ability to stop price is the previous low. You see, in this higher low, higher low, higher low. Remember, every single low is a price point. Okay, price came to this level, didn't go lower, pulled high. Came to this level, didn't go lower, pulled high. Came to this level, didn't go lower, pulled high. Came to this level, didn't go lower, pulled high. If price now comes down and disregards the pattern that has been forming, the first checkpoint will be the previous low. And then the second checkpoint will be the next low. Okay? Don't worry, I'm gonna mess up my chart because of you guys. It's all right. Okay? I just want you to get this thing very, very clearly so that you know how to monitor trades. Okay? And then the next one will be this one. Okay, this line is just about there. I'll show you different price levels now. So it's easy to monitor price. And should I do a Fibonacci, you will see most of it will align with my lines. Okay? And then the next price level will be this level. Okay? Now we can go ahead and duplicate this line. Can you see, just put it there by itself because the software already understands what I'm trying to do. Okay? And then this one, boom, there. All right then. So if price falls from here, if price opens on Sunday and continues to go down, the first level is gonna check is this level, 54.80. Okay? My line. Okay, for some reason the price on this line, but the line, the precise level where you put the line shows on the box on the left hand side here, over here. Okay, shows over here, so you can see over here. So the low, this previous low, yeah, was 54.83. Okay, that means $54 per barrel, $55, whatever, you can round the above. $54 per barrel. Okay, if price continues to go down, this is the level that price will test. Okay, and this level couldn't send price up. So in theory, it will look something like, I want to show you something like that. Just a little bit of unnecessary poking out of the line, and then price then comes back in line. Show you. Let's see. You probably see more on. You probably see more on. Okay, I don't want to go all the way back, but you see this line right here. It must have been either a support or a resistance. Okay, this line right here. Yeah, of course you can see price was dropping and price pulled back at that level and eventually goes lower. So this line must have been a support or resistance. Okay, so look at this rally. Okay, low, higher low. Yeah. Oh, perfect. Look, perfect. This is a perfect one. Look, low, yeah, higher low, higher low. Price is supposed to go up, maybe go to form this higher low. But look at what happened. As soon as price got here, pulled up a little bit and then came down and took out this low. Okay, again, pay attention. Low, higher low, higher low. Okay, price is supposed to go up and form maybe a higher low here or something like that. Okay, but look, as soon as this higher low forms, instead of price to just go up, price 2 candles, okay? This is daily, by the way, okay? 2 days, price stayed in this area. And on the 3rd day, instead of price just jumping up, it came down first. It came down first, took out this previous low, okay? If I had taken, remember I told you, if you took a trade from here, this is an opportunity to increase your trade. This is an opportunity to increase your trade. Every time price pullback is an opportunity to increase your trade so that eventually when it gets to the top, you have a lot of profiting bullish positions that would make you multiple profits, okay? Or you could have just taken one trade here and just leave it. But here, why leave? If you have more money, you can add more positions, especially if you're sure that this bullish trend is strong, okay? It's fundamental supportive and everybody supports it and the commodity is actually getting more expensive, okay? Why not? But the point I'm making is If you missed entry into this trend at this lowest point, where is the next point to enter? The next pullback. If you miss this one, where is the next point to enter? The next pullback. Imagine prices already started moving up. You know price is going all the way here, okay? And price was here, and then you came to buy here. That's a terrible idea. Because if you buy here, eventually price will move up, but what will happen first? Price will first come all the way down here. Look how many days of loss you'll be in. 1, 2, 3. And even this day will make you feel like, oh, it's coming back. And then boom, the next 3 days, price goes even lower. So what would happen is the loss here would have taken you out of the trade. Maybe you wipe off all your account if you don't have a lot of money. And guess what happens after that? Boom, price will eventually go up. So in a long time, you knew where price was going, but your entry point was terrible. Okay? You don't want to buy at the peaks. You want to buy the dips. Okay? You want to sell the highs, buy the lows. Remember, sell the highs, buy the low. So if you wanted to trade this trend, and at the time you came on here, price has already taken off and price is already here, you wouldn't buy yet. Okay? You allowed the first dip to happen. Even if you bought here, okay, this dip here, if you bought here, even if this happened, you wouldn't be in much of a loss because you entered the trade here, price only came here, yeah, and this happened, okay? And you can decide to take your profit every time price makes a new high, okay, and wait for a dip to happen and then enter again. Price makes a new high, take your profit here, wait for a dip to happen, enter again. And some people are just busy people. They just trade every single time. So buy here, take profit, yeah, sell here. Some people are not confident in selling when the main trend is a rally because, to be honest, the rally can kick in, yeah. This pattern of zigzag of up, high, low, price doesn't have to respect it. Price can just go high, like that. Or you could do it like 2 times, high, low, and then just go boom, just explode, yeah, like so. Look at this fall, yeah, look at this fall. This is an aggressive fall. There wasn't too much of a high, low. Look, aggressive fall, a little bit of pullback. On a very good day, there could have been a couple of pullbacks on the way. But look, it just strong fall, couple of days of consolidation, another strong fall, yeah. And similarly, you can see how drastic price fell here, yeah. And you can see how many pullbacks price had in the same distance, okay, on the way up. Yeah, a couple of pullbacks, a lot of pullbacks. Yeah. But look, on the way down, aggressively, price came down. Okay. So what I'm trying to say is in the direction of a trend, okay, price could move violently if it likes, or if people, depending on headlines or whatever happens, whatever is driving the price, people can become aggressive. What do the horizontal lines mean? You mean when you say horizontal lines, you mean these ones? Is that what you mean, Roy? Mohammed, sorry. You mean these ones, these horizontal lines? Yeah, they're just price lines, okay? You just put them in there to see price. Don't forget that this is price on the right hand side. Okay, this is price on the right hand side. The prices on the left hand side that you see here are just showing me exactly where my line is on the price line. Because for example, look at the price line here. My line is just there. I don't know, this is between 58 and 60. So if I was to put a line here, I don't know exactly what price point my line is. Okay, so they put this box over here. They didn't put it over here just so that it doesn't make everything clumsy. Okay, so they put it on this side so that when I put a line on this chart, at any point that I put a line, I can see precisely what price point is. Even when I'm moving my mouse, okay? If the market was open now, even if I'm moving my mouse, so look, it's even, you see, as I'm moving my mouse, yeah, it puts a cross there, yeah, showing me exactly what date, where my mouse is, showing me exactly what date it is. In fact, it shows time next to it, okay? Showing me exactly what date and showing me exactly what price point. Remember, if you're familiar with charts, okay, chart is always the x-axis against the y-axis. Okay, in trading is always time against price. Okay, so everything that is happening here is activity of people at certain time frame against certain price. Okay, so the straight lines helps you to see price. Okay, and of course, the line, the x-axis at the bottom helps you to see time. Okay, and you can alter the time frame by changing it here to see what you want to see. So even when we say price is doing a channel up, a channel down, you can know exactly what price, at what price is hitting the channels. So for example, let me give you an example. Let me close this. It's making my chat stiff. Give me 1 second, guys. Let me refresh this page. Okay, so yeah, so as you guys can see, if I wanted to check at what price point price is hitting my support or resistance, I can check it using the horizontal lines, isn't it? So we can say the lowest of yesterday, okay, the lowest of yesterday is this level. Okay, so if you see my mouse, right on my mouse is a dotted line. Okay, and the dotted line, as I'm moving my mouse, you can see this box right here on the right hand side, this box, this white box here. Okay, the black box always shows where the market price is. Okay, and if I'm using the mouse on the chart, the white box shows where my mouse is, what price my mouse is. Okay, so look, the low of Friday was 5502.8 thereabout. Yeah, maybe I may miss it by a couple of 5501.4, something like that. Okay, all right. So this previous low that I'm saying, if price keeps coming down, okay, this low is going to be the next test. Okay, the horizontal line helps you to see what price point it is. Okay, so for example, if you was reading the news and the news was saying, oh, the price range of crude oil now is between 54.07 and 59.58. Okay, you can come on your own chart to come and see what does that mean, and you can find those price points. Okay, and put a line there to say, look, they've mentioned this, so I'm just going to put a line there to help me monitor it. Okay, I'm going to put a line there to help me monitor it. So look, I put this horizontal line up here because it seemed to me, it's obvious that on the chart, this is the highest point. This is the highest point of crude oil for the whole year. Okay, the whole year. As crude oil, not the highest point for the year, but in recent times. Okay, this is the highest point for the. Let's actually find the high of the year for crude oil. I'm probably going to change this to weekly to make it easier. Okay, instead of scrolling. Okay, so 2019 started here. The highest of crude oil this year is there. Okay, what I normally do, which I haven't done in this occasion, what I normally do is I'll put a line on the highest level, highest price level for the year. Okay, let's put a line there. There, boom. So that whatever I'm doing in the future, say I change this back to daily chart, whatever I'm doing in the future, I know where the highest level is. Okay, I know it's a line that I just put now. There. Yeah, the highest level is there. Yeah, and most of the time, sometimes I even memorize the price. Yeah, 66.57. Okay, I just know 66.57 is the highest price. Price always almost came to test it here. Yeah, but it didn't even come close. It's still like almost 3,000 pips away. Yeah, 63. This is 66. Okay, that's the highest price for the year. Okay, so I could put a price as well. I could put a line as well on the second highest price for the year. Okay, this is a sharp test. See, this is sharp spike. Okay, and then I could maybe put a price on this particular one here as well. Put a line on it. Okay, and what does this mean as I'm putting line on it? These are price points on the way up. Okay, these are test points on the way up. Okay, so the same way I'm saying that if price disregards the trend that has been forming, it's been obeyed, okay, and price decides to come lower, there are different checkpoints. Price doesn't just move randomly. Remember I said it, price doesn't just move randomly, price always moves in pattern, okay? So if price continues to go down, the first checkpoint is this level, and then it will send price up. Should that level not hold, the next level is going to be this level, okay? It's going to be this low, okay? So the lows that has been forming on the way up are going to be checkpoints on the way down. Okay, it's going to be this low. If price takes out this low, then it's going to be this low. If price takes out this low, then it's going to be this next one. Okay, let me make my chart a little bit bigger so you can see it. Yeah, the chart looks a little bit clumsy now. Okay, so you can see it better now. Yeah, so the first test level is this level. Yeah, this level, then this level. Yeah, and then this level, and then this level. Okay, just following the lows. Yeah, just following the lows. Boom, 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 boom. And then the next one is going to be this level. Okay, there. Let me make the chart a little bit narrower so you can see it. Yeah, so you can see all the levels. Yeah, this is one. So as soon as price took out this on Friday, it's pulled back a little bit. Okay, on Sunday, what am I going to be watching for? Is price going to come and test this level? If price starts going up straight away, all well and good. Okay, and if it doesn't, and on the way up, where are the test points on the way up? Where are the test points on the way up when price starts going up? Yeah, you're going to look at the previous lows at the top of it. Okay, the first test point will be, remember I told you this line that was a support in time past. Now that price has broken it, on the way up, it's going to form a little bit of resistance. Would you see that resistance on the daily chart? Maybe not. Okay, you may have to change to a smaller time frame. Yeah, to see it. Yeah, when price gets here, you can see price may bounce along a little bit. Maybe it comes back to test this line. Yeah, and eventually break it in or break it back out. Okay, or most of the time that happens. I'll show you a good example of that on France 40. Yeah, because I've been trading. I was trading that recently, and price did something like that. So I'll show it to you now. I can't show it to you that much because the chart on my phone is kind of a little bit different from the chart on my. Okay, I can still show you a little bit. Okay, so the pattern that is forming here, yeah, the pattern that is forming here is this line right here. Okay, it's going to be a support, and this line up here, this one is going to be resistant, and I'm anticipating that price will be bouncing like this, like so. Okay, so that being said, we can say price is on its way down to, yeah, around this level. But initially, I thought the line would form here. I thought it was going to be here. I thought this was going to be the ceiling, but price pushed higher. Okay, and prices test that higher line twice. Okay, and the line is held. Okay, send price back down. But what I'm saying is, so that's from that my funny cheeky channel, tiny channel that I always put at the top. Okay, so this is my resistance zone as opposed to just one line. Because if I refer to this line as my resistance, then this line has been broken a couple of times, even though price still came back down. But hey, you can't call this. The resistance is a point where price can't go much beyond. Okay, and this top line hasn't formed yet at this point when I'm anticipating that price is going to be trapped in this channel. Okay, so I discovered this line first, or this price point first. And now I'm not sure it's valid. Look, price tested it once here, yeah, price tested it here, pulled back before it eventually broke. Price tested it twice here now. And remember, all of this hasn't happened when I had put the line here. Okay, so price crossing this to the top side now has now helped me to find the resistance zone. Okay, so it's between this level and this level. That's my resistance zone. So what I was trying to explain that made me come to this chart is price actually does bounce between resistance zones sometimes before it actually comes back into the main range. Okay, and you can see that a little bit here. Okay, this first time price came down straight. This second time price actually bounced between the line. Boom, 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 then break. Okay, so that was what I was trying to explain to you. So those little resistance zones, price may play a little bit there before it eventually goes back. In other words, what I'm trying to say is this top line that was support When it gets broken and price comes to the next support, okay, I have now considered this to be my support zone, just like I have my resistance zone at the top here. Okay, price could still bounce between these two lines. Okay, why is price bouncing there? Just further strengthening the opinion of that support becomes resistance, resistance becomes support. Okay, this was a support. Price has crossed it down, even though this next level I've considered it to be the extension of my support. On the way up, this has become a mini resistance. Okay, price breaks it and price comes back into the mid range. Okay, so should price continue to go down, this will be the checkpoint, and then continues to go down, this will be the checkpoint. And what happens is price can bounce between these two checkpoints. If that happens, what would that be called? Let me see if someone is following me. Okay, Wilford, after leaving, you watch the recording. That's fine. That's all right. That's why we record. Can someone just tell me that? So basically, say price push back, yeah, test this level, breaks it, comes back to test this level and didn't break it, and price then gets trapped in between this line temporarily before it actually goes back up or goes back down. What would we say is happening here? I think you should just do that so quickly. What would we say is happening there? Yeah, there's a particular word for it. When price is trapped between the support and the resistance, because don't forget that if price comes below this line, if price breaks this line, range, that's right. Yeah, exactly. That's what it is. That's a range. Okay, so if price breaks below this support, as soon as price crosses it, this line has become resistant because on the way up, it's going to resist price. Okay, it's going to present either a temporary resistance or a long-term resistance. Who knows? Depending on what's happening in the world at this time. If all of a sudden price cross over here, and people just believe that crude oil should not be as expensive, be more expensive than $55 per barrel, then this could become a ceiling for a long time. Who knows? But the point I'm making is this was a resistance when price, this was a support on the way down. Once price crosses it, it will become a resistance on the way up. So if price breaks this line, comes down, tests this line and can break it, goes back up, this line is going to hold price for a little bit. Price could bounce here, yeah? This will cause a range, okay? And we can call it consolidation. Like, okay, price is trying to decide, should it go back up or should it go further down, okay? And whatever happens, headlines, fundamentals, whatever, will determine the next price point or whatever, or financial report, whatever, can decide the next price point. So the same thing on the way up, when price begins to go up now, okay, these price levels, yeah, we can decide to put a line there. I'm not going to put a line there now because it's just going to make my chart very, very clumsy, but you understand what I mean. This low, this low, this low, this low. When price begins to go up, you would see that price will begin to react to those price levels, okay? Price will begin to react to those price levels. So the first one will be around here. Yeah, the first one will be around there. Price will react to it. And say the next one will be around, yeah, around here. Yeah, around here. Yeah, so as soon as price is going up, you would see a little bit of G-trade here. I mean, if there's a consensus that price should go back up here, yeah, when price gets to this level, a little bit of G-trade, price will get to this level, you can see price may bounce at this line a couple of times and then it will go up. I mean, this happens a lot on the chart. It's just that it takes a bit of, so depending on what has happened in the past, I can't start scrolling now, depending on what has happened in the past, the reason why you see something like this, let me show you. No, don't want to draw a line, just want to duplicate this line. Okay, look at something like this. Let me show you. Yeah, look at something like this. Yeah, can you see price bouncing on this level a little bit before it eventually goes up? Yeah, why? Look, it has been a pullback point in the past. Okay, higher high, higher high, higher high, higher high, higher high. Okay, so it's a price point. If I scroll in the past now, you would see that it's been something significant in the past. So things don't just happen, okay? Things happen for a reason. My chart is a bit slow now. Okay. Okay. So this is that line, right? Is it this line? Is that the line? Let's see again. There's so many things running on this computer, so it's not as quick as it used to be. Okay, so this is the line that we're looking at. Okay, so it's 58.11. Okay, 58.11. Okay, I noticed price stalling. Can you see that? Yeah, and this is 4 hours chart. You can imagine how long this was. Okay, yeah, 4 hours. Okay, so that's 4, 8, 12, 16, 20, 24, whatever, man. You can calculate how many hours was here. Okay, that price was stalling. Every time price was trying to go up, it almost like a flat kind of line. Okay, even push price down to the bottom. Yeah, push price down to the bottom. And then on the way back up again, price stalled there a little bit before it then broke. And even when price broke here, look, it was a false break. Yeah, the body of price closed even below the line. And even when price poked this high, came below the line before eventually price closed up with it. Bear in mind as well, the way to actually ascertain that a line has been broken is when the body of the candle that breaks it actually closes above the line. Okay, so these two are still false breaks because look, price journeyed as high as here during this 4 hour section, but price settled, it closed below the line. So we can say this line is still holding, even as far as here. Okay, the only thing this indicates is this line may not hold for that longer, because up until then, price has not even raised its head above it. Okay, price has stayed below it. And then the first poke closed below it. The second poke, yeah, higher than this previous high, okay, but closed below it. Okay, and then you can see the next poke, price stayed above it. Okay, these are things that your eyes will be trained to see. It helps you to understand more charts, okay, the body of a candle and where the body of a candle closes. And is it above a line that you're watching, or is it below the line you're watching? Or price has crossed it, or is price going to close above it? Okay, these are things that you're going to be thinking. They call it, you hear things like inside day, outside day, inside day, outside day. Okay, so if this was a, let me give you an example of what inside day is. Yeah, so this is if this is a daily candle, let me go back to daily. Okay. Yeah. So look at this candle. Okay, look at this bearish candle. Yeah, price opened here, price closed at the bottom here. But in this session, price went as high as here. Of course, the sellers came in. So this was a massive green candle. Okay, the sellers came in and they sold all the way, crossed over the opening price, and then closed over here. So hence it becomes an inverted hammer. Okay, it becomes a big inverted hammer. And remember, price was climbing there, and then the hammer shows up. What does that mean? Price is about to reverse. Okay, and look at the reversal. Boom, happen. Okay, so single candlestick patterns, a perfect application here. Okay, price was forming higher high, higher low, higher low, higher high, higher low, higher high, and then the new high was actually an explosion. Okay, but as soon as the candle closed, yeah, it's a daily candle. As soon as the candle closed, formed an inverted hammer. Okay, and then it can also be called evening star. Okay, again, boom, price fell down. But what I'm trying to say is, look at this next candle. Okay, the high of this candle is still inside there because it's still inside the range of the previous day. Okay, so even though the candle was a big green candle, people will still consider it not to be a reversal was about to happen because it's inside there. Why? The high of it is lower than the previous high of this candle, and the low of it is lower than the low of this previous candle. Okay, so it's inside. So this day still swallows it, even though the body of the candle is bigger than the body of the bullish, but it's an inside day candle. Okay, so as soon as this day closes, the bears that want to sell, they're still encouraged. Hence, the next candle, they display their courage over there. So this is an inside day. Imagine if this candle had reached like this level, yeah, in the activity of the day, and eventually came to close on the same level to close. It's an outside day. Okay, it sends a signal to the buyer that, look, hey, maybe we can still continue. and the sellers will be very, very skeptical to jump in aggressively. Okay, they will be very, very skeptical because it's posted and outside there. But in this case, it's an inside there, and then boom, the selling happened. Okay, so so let me just touch on again. This is just talking more about support and resistance. Remember, I said the more skillful you become with support and resistance, the better a trader you become. I've looked at some of you that have done your charts, and what I've noticed is, and you will get better. Inside there is a symptom of falling price. Exactly. It depends on what direction though, but yeah, it is. What I wanted to mention about the charts that I've seen is a precaution that I wanted to say is do not force your lines on charts. Actually make sure that you spot the pattern. Okay, don't force lines to, I don't expect you to be perfect now, okay, but you will grow into perfection. I'm trying to find a chart that I've never opened before and use an example and show you what I mean. So if I open this chart now, okay, this is a blank chart. I've never been here before. There's no lines in it. Okay, of course you can see my moving average there because I've set to show up on any chart that I open. Okay, but just opening this chart, what can I see? Just opening this chart, what can I see? What patterns can I see? I want to show, actually I've been here before in the past, okay? But let's ignore what has happened in the past, okay? Let's focus on right now, okay? So let's make that line kind of disappear. What can I see? Okay, I'll show you what I can see. I'm not gonna force lines on it to say, look, no, I want, this is where it is. No, I'm just gonna look at what's happening, okay? Yeah, so I can see, I want to put a line here. Can you see that? Yeah, so I can see, yeah, boom, boom, boom. Yeah, let me make it smaller. And if I duplicate this line, let me not duplicate it because the computer is a little bit slow at the moment. Let me just put another line there. Yeah, I can put another line right here like so. Boom. And now I adjust it, don't worry. I like what I'm seeing on your chart because you can spot that even when we say trends, it doesn't have to be perfectly shaped, okay? Sometimes it could be like a cone, sometimes it could be like triangle. We're gonna look at that in subsequent classes. You're gonna look at patterns that look like flags, wedges, yeah, flags, triangles, wedges. I can already see in your chart. It's just that I don't know if it's intentional or if it's just you trying to force, and I think it's you because I haven't showed you, okay? So I haven't showed you, so I think you're just trying to make the thing work, okay? Don't ever try to make price work. You can never make price work. What will happen is you will give yourself a false indication of where price should get to. And then when price doesn't conform to the line, you will be confused, okay? Make sure that you actually, because the intention is to see what price has done in the past to predict what it will do in the future. Don't try to make price fit into your lines. Actually draw the lines where you see the prices at, okay? So I've seen here the price. Now, I didn't draw this line and price, just showed up. The price was there. My eyes could just put an imaginary line and then I put a physical one, okay? So boom, price is touched it once, touch it twice, touch it 3 times, okay? And here's where I can see a little bit of pullback. It was a pullback here, but as soon as these two formed, okay, it becomes more than a pullback for me. It becomes a price point, okay? 1, 2, 3, okay? And why did I not put a line above this whiskers? There's no need because the real money is below it. In other words, price didn't close above this level. Price generally was below it. Okay, so there's a little poke, yeah, but the real money is here. The real money is the body of the candle. Okay, so so based on this, what do I think is going to be happening based on this? Okay, I think price is got a lot to do on the downside. Okay, but in the near term, what is happening in the near term? Okay, What is happening in the near time is this is forming. I'm going to show you. Okay, so in the ascension, yeah, price climbing to the top of this channel, yeah, I can notice this, yeah. This is the pattern in which price is going, and of course I can duplicate this line. I can duplicate this line and put it up here. Okay, this is the channel through which price climbed to the top. So if I wanted to trade, I'm not just going to trade, oh, wow, this is the main range, okay? This is the bottom of it, this is the top of it, price bouncing, boom, yeah? Went halfway, came back to test it. And this is not went halfway, okay? This is not went halfway. This is price following a particular pattern and the pattern got broken, yeah? Your eyes must be able to see these things, yeah? And ask yourself, why did that happen? Look, this was what was happening here. Yeah, so you can see 1, 2, 3, tested this time, broke, again it's a false break. Price closed a little bit above it, but hey, it could just be my line, okay? And eventually, but remember I said when this happens, it shows that this line is about to give way, okay? Boom, boom, boom. Yeah, so price was trading between this triangle kind of, yeah? I could have scrolled back and put some other line here, but hey, we're in this future now, so let's forget about that part. Yeah, boom, 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 the line broke, went to the top of the channel, okay? And then you can see I could put a line here as well. Yeah, boom, boom, boom. I could put a line here, yeah, and put a line here too. And then you begin to see multiple, yeah, price was bouncing here. But the main range is this top of the range, this bottom of the range. Okay, when price got to the bottom and it was going to the top, it went in the pattern, okay? And this was the pattern, yeah, boom, 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 yeah. This line has held now, hence I can't say, oh yeah, price is going down here. In the long term, the journey is going to be from the top to the bottom, okay? But in the meantime, what can price do? Yeah, boom, 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 boom. Price will go up again, but this time, price is not going to be attempting to come to complete this mini range, okay? It's going to be a test of if this line is going to hold. The test that this line has faced here is not as strong as what it's going to face in here because now it's two trends merging into one, okay? So boom, 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 boom. Yeah, that is a possibility to keep happening. If this line doesn't hold, then we can see that happening. So when price could come back up to test this level one more time and then come back down again. If this line then breaks, then price will attempt to come back to this bottom, you know. But then it won't just come straight. It will form some kind of like a pattern on the way down as well. You need to be able to see that. And if line breaks this level, goes back up, it's going to come to this line. It's going to come back to test it again, but this time it will have become a support. Here it's a resistance. It will become a support, and then price will then begin to go up. If that doesn't happen, price will keep going in this triangle, okay? So price will then form this triangle now. Yeah, price will bounce in this triangle. And the closer it gets to the edge of the triangle, the more we will know where price is going next, okay? It can either break to the top side, break to the bottom side. If it breaks to this bottom side, then price will kind of find a range or find a channel, okay, by which it travel to come test this bottom line again. Does that make sense? Okay, so this is how, so never force your line onto price. Okay, make sure that whatever you're putting a line on has actually happened and you can see. And remember, to make a line valid, price must have tested it at least twice. Okay. Regarding the risk-reward ratio, when you take a trade, say you put trade, I already explained what deal and order is, isn't it? Someone asked in group chat, and I explained deal is when you're placing a trade right on the spot. Order is if you want to take a trade to happen in the future. So if I want to place an order saying if this line should break, yeah, I want to sell. So if I should put a line here, an horizontal line, yeah, I put an horizontal line around here and say, look, if price cross below this level, I want to sell. Yeah, I'm going to look at the level is 188,200. So I can place an order. I can say sell. Yeah, sell. So ask me how much do I want to sell. Say I want to sell one, just for example. Yeah, I want to sell one. It's an order, so it must happen in the future. When do I want to sell? when price goes below this level, 188,200. So I can say 188,200.5. So I can say 188,200. Okay, I don't need to put a 0.5 because definitely 200 is lower than the 0.5. Yeah, so if I place this order now, oh, okay, saying there's no, this is one of my, this account doesn't have anything in it, but say there was money in there. If I place that trade now, you would see a gray sell line show up. It won't be the red one. Remember, the red one is live, the trade is live, but you would see a sell. It's going to be great, and to have this GTC, okay, it means good till condition, okay, good till the condition that I've set becomes a reality, and then the trade. So once price crosses below this like that, boom, the trade comes to life, and then it begins to operate. And even on an order, you can set a stop loss. Okay, I can say, look, I don't want to lose more than this, and I want to make profit. Say I want to sell it all the way down to the bottom of the range. Okay, so looking at price will come to the bottom of the range around 171.8K. Okay, so I want price to come all the way down here. So if I should take that trade, yeah, I want to lose about £2,000 and I want to make about £16,000 if that trade pans out. Yeah, so if I should take this trade now, my risk reward ratio is 1 to 7. Okay, this is the meaning of risk reward ratio. So I'm willing to risk, I'm willing to lose 1 in order to gain 7. Yeah, so it's like when you place your bet, the odds. Okay, it's like the odds of this trade. Okay, I'm willing to, should I not be there monitoring, I'm willing to lose as much as, and of course, before I can be willing to lose as much as this, I probably have like maybe thousands of pounds of account or worth of an account. Okay, so in this trade, I'm setting my journey to make £16,379. Or if the trade should move against me, this is how much I'm willing to lose. Okay, that is my risk reward ratio, 1 to 7. Okay, yeah, you can find 7 of this in this or close to. Okay, 1 to 7, that's risk reward. The other thing I said I was going to mention in this class was how much of your money should you be willing to expose to trade. Okay, some people would say 1%, some people will say 2% of your capital now. Yeah, some people will say 2%, some people will say 5%. My question is, if someone is starting to trade, if you're starting to trade as a new trader, I wouldn't advise you to open a £5,000 trading account because you would waste the money. Okay, so let's say you start trading with £1,000. Okay, if you start trading with £1,000, if you want to use a trade platform like IG, okay, the 1% rule or 2% rule or 3% rule wouldn't really work because you wouldn't even really find anything to trade with that. Say you want to trade France 40, which is one of the cheapest, or you want to trade like crude oil, and you're going to be trading like 0.25. Yeah, that will still cost you upwards of 10%. Okay, so to be honest, you need to in the beginning of your trading account, you're going to be taking risks to grow your account to a place where you can then take smaller risks and be in the ratio of. But to be honest, my own philosophy about how much should you risk is you need to take quality trades. Quality is more important than quantity. It's not about how many trades you take. It's about the quality of the trade that you take. So if it takes you waiting until you find a good entry, just wait. Don't jump in the market. Okay, the fact that the market is open 24/7 doesn't mean you should be in the market 24/7. That is a very good way to become a failure in the market. Okay, find your supports, find your resistance, find the good price points. You want to sell the highs and buy the lows. Okay, so if this is what you're trading, okay, if this channel is what you're trading, if prices touch this level, okay, and you're looking to sell when it touches this level, don't sell when price is just here. Don't do it. Don't do it. Make sure the price actually gets to where you want it to get to, and then sell from there. So that should price go above it, you can set your stop loss as tight as possible. Maybe like £5 worth of, I don't care, because I'm a startup. Okay, I want to sell at a point where price won't move against me that much before it starts moving in my direction. That's a good practice until you become more confident and you've made more money to be able to take, to be able to make some certain decisions. Okay? So quality over quantity, that is my philosophy for how much you should risk. Okay? If you find a quality trade, then I can put my money into it. Life is all about risk anyways. But make sure that you're making a reasonable risk, not just a silly risk. Okay? So that is risk-reward ratio. That is my philosophy about how much should you expose yourself in the market. Expose yourself to quality trades. That's how you make money. And again, do not force your support and resistance lines. Make sure that you actually see that happen. One thing I've noticed as well is some of your charts just look, I'm still seeing things that gives me an impression that you're trading CFD. Okay. Make sure that you change your settings to spread bet, all of you. So go under settings if you're using a computer, go under settings like so, okay? And you want to change this default of show force open in the market. By default, it should be on net off. You want to change it to force open. It will give you the ability to trade in two directions. If you're going to be trading a certain amount of size on the same market, you want to sell this. If you set this, every time you click on that market, it automatically, if you always trade 0.5, it will just set it to 0.5. If you're going to be changing it from time to time, you want to switch this off. Okay, so you set it every single time you want to trade. Yeah, and to change your account to CFD or blah, 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 blah. And if you're on a computer, you want to click on your account, you want to go on my IG, and then you want to make sure that when you're opening your account, you don't open CFD, you open a spread bet. Okay? So that's very, very important. And when you want to trade any market, say you open the market, say you open indices now, yeah? Or say you open, let me use commodities. I think that would illustrate my point better. Yeah? If you open commodity, or say you search for something, always make sure that you trade DFB. Okay? Always make sure that you trade DFB. I think computer most of the time sets it to DFB. But if you were to search for, say I search for gold now, okay? Because most of you will be doing searching, yeah? You will see gold, you will see spot gold, you will see all manner of stuff. You want to be trading the one that has DFB next to it, especially on mobile phones. Yeah, don't trade the ones that have dates next to it. Those ones are futures. If you open those trades, you may not be able to close it up till a certain date. You don't want that, okay? You want to trade the one that has DFB next to it. So that's that. That being said, we're going into a new week. Please take more trades. I want to see more trades. Open trades, close them. Open trades, close them. As a matter of fact, let me tell you something. In the beginning, okay, I don't want you guys to be trading over days. You can have some trades that are running over days. I want you to do hourly trade more or inside the day, okay? I want you to learn to trade inside the day. So what does that mean? Open trades in a day and close it in the day, okay? So, and you find most of those kind of trades on volatile markets, markets that are very, very busy, popular markets. So if you open your IG, go to popular markets, you see currencies like GBP, USD, USD, JPY, USD, Euro USD. Those are top popular markets that have volume during the day. Gold, silver, crude oil. If you're trading something like cotton, it's going to take you a long time. I saw someone trading cotton. It's good. It's all right. It's all right to look at those markets or stuff, but those markets, they don't move. They're not busy. Okay? It takes time to see it move. So you won't really be able to put your knowledge to test. You want to trade markets that are very volatile, that respond very, very quickly. Okay? Where you can open a trade and in 15, 20 minutes, you can make money. Okay? So go into popular markets, popular Forex markets, popular commodities, popular indices, German 30, France 40, Wall Street, US 500. Those are what I expect you guys to be trading. No like trading cocoa, cotton, coffee. That's just long. Okay? You can trade those when you're a master of your own trade. You can have in your portfolio and do whatever you like with it. But for learning purposes, for me to be able to track your progress and know if you understand what we're doing, I need you to be trading major popular markets, okay? Popular Forex, popular indices, popular cryptocurrencies if you like. I would say avoid cryptocurrency for now for learning purposes. When you understand trading, you can go back to cryptos. Before winding up, can you please tell what the reason for fall in the crude oil price is? Okay, so on Friday, what happened was it was just a psychological thing. Okay, it was a psychological thing. The fall in crude oil on Friday, it was just they just wanted to come back to the bottom range. That's all it is. Okay, for a couple of days, why does this chart look different? Oh, because I changed it. I changed it from one account to another account. Let me go back to the account that I was before, and I'll be able to explain it better to you. Okay, so the reason is because, yeah. So you see, price has been here for a couple of days. Yeah, price has been up here for a couple of days, and people were really, really hoping to break this line. Okay, the market was really, really hoping to break this line. People they wanted to come and test the 60 line. Okay, so during the week, you can see the days are tiny. Nothing much happened. Price stayed in this area. They were waiting for a decider, and as soon as Trump came on on Friday, and he said, because I remember I was talking to you on Wednesday, and I was saying all the markets were hanging on the US and China trade and what was going to come out of it. And Trump came and tweeted on Thursday, saying, yeah, they were close to the deal, but China is still moving dodgy. Something like that. He just messed everything up. He just sent a tweet that messed everything up. So people just felt, you know what, we were hanging onto the results or optimism from this trade deal to be able to push price up. If it's not coming, we might as well just go to the bottom of the channel because they already hit the top here. Okay? Boom, 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 boom. So ideally, what should have happened is this anyways. The reason why it looks funny is because it happened over one day, a massive drop. Yeah? But if it happened in this fashion, you wouldn't have complained. Yeah? It would have been price hit the top and then took a couple of days to come down. But for those couple of days that could have arranged this way, price was locked up in this area because people wanted actually price to go higher. Okay, and once they waited Monday, Tuesday, Wednesday, Thursday, and as of Friday, nothing good was coming. They just said, you know what, forget it. Okay, that was it. So that was what happened. So it wasn't anything drastic that happened in the market. It's not a crash. It's just a delayed price travel. Okay, it was a delayed price travel. People were waiting to see if anything good was going to make price go up, but nothing good happened. So on Friday, people just say, you know what, pack it up. We're going to sell it back down. We'll continue next week. So that's what it is. So guys, please take more trades. So what that means is on a daily basis, we should be seeing more snapshots in the group. Saying, okay, look, this was the trades that I took today. And don't only post your winning trades. Okay, post your losing trades. Post your losing trades. It helps you learn better. I can then be able to correct should anything. And the fact that you lose a trade doesn't mean you was wrong. Okay? In trading, you win trades, you lose trades. Okay? But there are some trades that you may lose because you made wrong judgment. Then I will be able to correct it. But if I don't see it, I wouldn't be able to correct anything. So don't try to post your winning trades to impress anyone. Okay? Post your winning trades, post your losing trades. What I want to see is why you make those trades. Okay? I want to see how you identified your support, how you identified your resistance, and why you entered into that trade and took that direction you took. And I want to see the outcome of it, either negative or positive. Okay, so let's do that. So do we have a good understanding so far? Yeah, let's just get a course answer and then we'll call it a day. Do we have a good understanding so far? Yeah, great, amazing stuff. So please, the instruction to take away from this class is stick to the popular markets, guys. Please stick to the popular markets. Don't go for some funny, slow markets, okay? Stick to the popular ones, the popular Forex, the ones you see at the top, the popular indices. You already know what indices is, so you want to go for indices that involve US, UK, Germany, France, Italy. Stay in those regions. Commodity, you want to stay in the energies, okay? Crude oil, natural gas. You want to stay with gold, silver, yeah? So let's do that for this coming week and take trades on a short-term basis. Yeah, use 15 India, China, India. Yeah, that's fine. China, India is fine. Okay. So use 15 minutes charts. Use 15 minutes charts to take trades. Okay? Use 15 minutes charts to take trades. So you can trade over 4 hours. Yeah, using 15 minutes chart. So if I was to use 15 minutes chart on crude oil, look at that. Yeah, that's a decent travel. Yeah, that's a decent travel. Yeah, so use 15 minutes charts to take trades. Yeah, look at that. That's a decent travel. Yeah, so do that. And let's see. I want to see plenty of snapshots. You know, I want to see plenty, and I want to see everyone represented in there. That way, I can tell you, I can be able to monitor your progress for you and tell you that you're doing well. Can you please tell us what happened? Is it Iraqi unrest? Yeah, political. No. It's not political. Political unrest in the Middle East will cause price to go up. It won't cause price to go down. Okay, political unrest is a bullish signal because when there is political unrest, it affects oil production and price will go up. Okay. All right then. So guys, I'm gonna wait till Wednesday again to see how far you guys have done in the market. Again, please do more research. Do more of looking at what causes price to go up and down. And then we will meet again on Wednesday. Okay? Ask questions in the group, take more trades, and I'll see you guys on Wednesday. Yeah? So thank you very much for joining again today. Enjoy the rest of your weekend, and I shall see you on Wednesday. Yeah? Amazing stuff. Thank you, Mom, and take care. Yeah, and I'll see you guys on Wednesday.